Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look at the gold market. So if you remember on the Christmas Eve when we have prepared the last update before the holidays, it was really very interesting situation in the gold market that has turned to the active action as activity after the long time of the spending in a tight range with a narrowing performance. So take a look, that was actually the week before that. So it's really extremely narrow trading range, and we said in the weekly report that the ultimate contraction of the trading range is promising to show outstanding performance, just because if you are narrowing too strong something, it tries to expand also at a significant scale, and that really has happened. With this rally that we have right now, we need to mention a few things. First of all, not even speaking on the technical picture that we have here, but on the background. So take into consideration, guys, that this rally has happened on the background of the same kind of the performance on the stock market. Initially, informal agencies and the news were saying that that's probably before the holidays, investors trying to protect their money, putting them in the gold, and so on. But I really have real doubts on this subject. So because this has happened just a few hours before the stopping trading on the market. So it was really very fast action, and it started earlier before the holidays. Second, in a long time we talked about the bullish positions on the market. So if we'll take a look at the Commitment of Traders report for all this action, it stands right from this top, you'll see that investors do not sell the gold. They were keeping longs near the extreme high value. So yes, some decreasing of the position has happened, but this is mostly due to the short-term speculators. So in general, investors are keeping gold position in the high level. So this is really very important. And that's why we're keeping the long-term view as bullish. So we talked about it every time when I prepared the weekly report on the monthly chart. Because in fact on the monthly, this is the bullish flag. And this has been broken up. So the upward action has started. What does it mean? It means that we could get the real continuation to our nearest resistance that we have on the monthly. It's approximately 1580 area. Currently, guys, from the technical point of view, what we have, upward breakout has happened. Now market stands at the resistance. So we have the 1514 major resistance from this top to this bottom, 618 level, and it agrees with the XOP target, this A, B, C bottom XOP. Potentially bearish flag, because we also previously had this A, B, C top pattern, OP 1490, and flag was bearish. Potentially it has broken up. What is interesting, guys, is that as I shown in on Wednesday, before the Christmas, I was showing you, if you remember, chart in the euro, the same gold market, and take a look what has happened here. This ABCD pattern that we talked about on the gold to dollar, it has not been completed, but gold to euro, it is. So take a look at this spike down. That was the background for our suggestion that we are at the beginning of the great rally. It was wash and rinse, guys. And bending of this consolidation, return right back up, tells us that we're stand in a new, as I suggest. So it seems that indeed this is the new upward continuation of something really significant on the gold market. It's not just occasional action, it's not just some kind of the retracement, it's too fast acceleration. Long positions are significant. And I think that this action, guys, put the shadow on the stock market. So be careful if you're trading on the stock market when the gold rallies with the stock market at the same time. That means something, that something goes in the wrong direction. So now turning back to our dollar chart. Another pattern that have been formed here by the candlestick. Those of you who are familiar with that, so you can see the three white soldiers have been formed. Increasing white candles with the tail closing to the upside direction indicates the strong performance. I even do not want to mention different trend lines and so on, so that's obvious. So now what we could expect in the current situation. Well, guys, first of all, of course, we do not want to take the position right at the conference, at the agreement resistance. We would like to get the pullback. And this pullback is really could happen because that's actually the first significant leg of the breakout after the long-term descent, kind of the consolidation. So probably we should get something. Personally, I like the idea with the reverse head and shoulders pattern here, guys. So take a look. I will contract chart first, then explain some near standing moments. I would suggest that we should get something of that sort. Here's we should get some retracement of this depth approximately to the confluence. So take a look at the confluence 1487, 1490. It's confluence support that approximately agrees with, as you can see, these multiple bottoms that was forming here in October. And I suggest that market really could show some kind of the retracement right back down here. Maybe a bit smaller, but something of that sort. That will get us a chance to go long, I suppose somewhere around 15 even area. The same story, guys, you have on the euro currency. So take a look, not on the currency, on the gold to euro. That could become the shoulder. That the head, here's again, could be the shoulder. Market could retrace right back down to the upper border of this consolidation. In euro, it's approximately 1340 area. So now, speaking on the shorter term perspective, here, guys, we could consider upside thrust. So it looks really good. It's and very cool for any Jordan-Napoli directional patterns. That could be double repo. So in the current circumstances, double repo looks more logical because we expect deeper retracement. Well, if we'll get the bread and butter with the retracement to the 15 even, well, that's also acceptable. So we could try to take the position in bread and butter trade as well. But in the current circumstances, it means that it seems that we probably should get something like the double repo sell. Bearish engulfing already stands in place. Let's take this out where we have the close below 3x3. Close 1508.74, 1508.75. Yes, one tick close below the 3x3 moving average, at least by the fixed choice quads. So it's better to check this out on the futures on the gold market. But anyway, that's pattern to consider. If you would like to take the short position, you could act differently. You could wait for a clear bearish pattern here by Jordan-Napoli, for example, double repo, or you could take a look at the hourly chart because here is also some possibilities exist. First of all, I already have mentioned bearish engulfing that we have on the 4 time frame chart. Also here, I suppose we will get a bit not quite good shape, but it could be head and shoulders case. Let's take a look. We have the 127 butterfly. This could become the left shoulder. Head market could drop further, shorting upward retracement. That will be the chance to go short a bit earlier than a double repo will be formed. So that's for those of you who consider taking the short position, or wait for just double repo sell. That's also a chance. Others who trade on the daily chart, we should not take any short positions because we have the greater scale for trading, and we just keep watching for a reasonable pullback. So I would suggest that it should be somewhere between these two levels. So 15 even, 1490. Somewhere here this will be the point where we will consider taking the long position.